Hey traders, welcome to a global macro update. We'll be going over a little bit more stuff than the usual, where we're just going to stick to one asset, but we're going to stick to the multi-asset analysis that we kind of used to in this video, but we're going to make it a little bit shorter here. So let's talk about the S&P on the daily chart. So clearly we are basically right at the high that we had for the all-time high back in February of 2020 before this whole COVID situation. And we're basically right at that zone again, right? So let's look at what happened, back in the past when we had massive sell-offs. Just looking at potentially this one right here. Let's get this guy. Huge sell-off, but it came back. This one came back even at a greater rate. So we see something like this, right? Maybe like that. But then it'd just be this continuing going on here. So it's happened before, and the big question that we're going to be looking at is, if it breaks, what are we going to be looking for? And in short, I think that the overall risk-on sentiment is going to continue, to be completely honest. It kind of sounds crazy, but with all the things happening, especially from kind of the huge meltdown point, there was obviously a worry of the virus, of the pandemic, and then we had the whole social movement of the Black Lives Matter and the social unrest. There was like legit rioting in the United States, and the entire time that was occurring in the actual economy, the actual S&P and other instruments we're moving to the upside. So there's a huge disconnect between the actual economy and the stock market, and as long as the Fed is keeping the very low interest rates and the easy money, easy liquidity policy, I think that this is going to continue moving towards the upside. And I don't really expect it to have a massive sell-off until it really breaks some key significant zones. So in my personal belief, I don't need to be a seller. Let's just take a picture here. Let's get a snip. I don't need to be a seller at the very, very top of the zone. Like, to me, trying to sell, that's a really poorly... Black's probably the worst thing you can do on that. There we go. So, there's no point, in my opinion, trying to sell all the way up here. It kind of does not really give you enough dependability to actually have a dependable trade. What I would be looking for is, let's look at the previous structure before that massive high, right? We had this previous low, and then we had that same low hit, right? So this is going to be a major level on the chart. Once the price breaks below that zone, then you can be looking for a little bit more exposure to the downside, or hedging, or giving you some level of risk mitigation if you're just perma-long everything in the market. Now what we have right here, the area that I'm really looking at is going to be this previous low turned to this high in this zone right around here, around $3,200, right around there. It's not an exact price point, we got to remember, but it's this level right around here that I'm going to be looking out for to see if the price is able to pass the zone. We do see some level of an ascending zone, kind of like with these higher lows right here. Let's see if you can connect that zone kind of like so. This ascending trend line doesn't really matter too much. It's more the horizontal zones that I'm looking at, but I just like to indicate where, I think this side's going to be a little bit better. I like to indicate where the higher lows are, sort of like there. And what we're also going to be doing is getting a rectangular zone and putting that key level of support and resistance at around $3,200. So like I said, this is going to be the key level that I'd want to see the price break before I really look for any short exposure, even just looking on the daily chart. And then obviously we see that high at around 34, just under 34. So we're testing that right now. So let's go to a smaller time frame and see what we're able to identify. Like I said, this ascending zone is not extremely well respected. It's, in my opinion, just a way for me to kind of gauge where the kind of higher lows are. But obviously you could just shift it a little bit. I think that looks a little bit better, where you have a previous resistance, support, resistance right there, turning again to support, 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 support. So this is going to be your main zone. So I'm going to color this green, because if it passes, this is going to be a major significant demand zone that we've passed, and it's a pretty significant price point to be looking at. And then let's just indicate where this is. this minor level of resistance turn into a new level of support, because we do like to understand where zones of sensitivity is. And this is that all-time high that we are attacking or trying to break right now. Right there. And let's make that red because that is a resistance zone. So right now, in terms of the S&P, I don't really see any trade whatsoever. It's just made a strong impulse push, and we are now seeing the price kind of interact with this all-time high. Right now, it's holding it. It's not really seeing any confidence from the buyers just yet, because we've seen rejections every single time. But the buyers are still in the market, still present, indicated by the higher lows. So theoretically, if you're looking at a smaller time frame, like if we go down, let's say, to the 1 hour, you could say that this is an ascending triangle formation, although it does look like it broke a little bit. If you're using this zone as the resistance, it did break a little bit, holding that previous support yet again, right around there. So we'll see where it goes. If it does break to the downside, we could still be holding these higher lows, so I want to be pretty cautious. And like I said, $3,200 all the way down here on a 1 hour. On a 6 hour, it's a lot closer, but that would be the area that I'd be waiting for in terms of shorts. Because if we are going to get something like this, you don't need to be the first one in. You could wait for the impulsive push to really indicate that there is confidence from the sellers, in my personal belief. We are contracting also in volatility right now, and we did see something similar before, some massive drops that we did see. So will be interesting to see how the volatility index and the S&P kind of come together, because this is the current VIX where we see it really contracting. We do see a base at around $20 hold. Not really the low. The low's like at $11, $10. That would be kind of the low that we've seen historically, around 8, 11. Back in like 2018, it kind of was like at 10, 11, and then before it was at like 8. So we are basing at a higher point. So the overall volatility is increasing, but obviously right now on the small time frames, we are contracting in volatility. But this descending trend line does indicate that there is a squeeze that could occur. Initially, it was from this low and this series of resistances that turned into a potential level of support at around 24.8, 25, somewhere around there. But unfortunately, did not hold. So the S&P continued to move to the upside, and we see the VIX continue to fall, breaking supports, holding resistances. I think if it does break above, let's now take this out of the situation. I think if it starts to break above this zone at around 24, that could indicate another pretty significant sell-off, kind of like we saw here. Or once you see volatility start to expand, you're going to really start to see S&P fall. And we still know that the BTC S&P correlation is still positive. So I think that if the risk on assets start to take a little bit of a tumble and sell off, I think Bitcoin and alts will kind of continue to perform in a similar way as well. So that's a little bit of discussion on the wicks. The NASDAQ has now created a series of higher highs that's holding, and it is holding against an ascending support. So this is theoretically, for me, an ascending wedge formation. Now this did form previously, and it did break to the upside, continuing the trend up. But we'll see how it reacts to this new structure that we're able to see here. So let's just get the midpoint. So this is a midpoint on the wedge. And then what we're looking for, let's just take away some of the horizontal lines because we don't necessarily need them. This is the all-time high for the NASDAQ at like 11.3, 11.4, kind of where it's trending right about now. So we really don't want it breaking this resistance because we see type B, you could say A, type A, and type B. So this is the high that you really don't want to break. So what you ideally want to be seeing is weakening, right? Something maybe like this, and then you see a break to the downside, impulsive push, and you're seeing a pullback, maybe test these higher or consolidating lows right there, and you're going to get the sell-off. That's ideally the situation you're looking for if you're looking for a sell-off. But like I said before, if you're looking to short anything, the NASDAQ is not at, it has been a relatively strong index compared to not even the US indexes, but even looking at the global indexes, looking at the DAX, looking at the FTSE, looking at the Nikkei 225, we can see that the NASDAQ is relatively strong. So if we're looking to long anything in the indexes, probably the NASDAQ would be on the list, and it would not be on the short list for sure. Something like the FTSE would probably be on the short list because it's not performing well relative to the other indexes that we've talked about. So it's not looking as ideal. Now, if it does actually break to the upside and break this series of higher highs and form a significant higher high and retest that previous high as a new low, as a higher low, that could be very bullish. And we don't want to take that out of a situation that could appear in the future. But I think at this point in time, we want to be a little bit cautious. S&P is at a basically key level of resistance at an all-time high. So that's going to be a significant area that we do have to take into consideration. And we do have to definitely keep in mind that there's probably going to be a lot of people selling right here. And if it goes above, every single person who's ever invested, as long as they didn't sell, is now green, right, in the S&P. Because if it upticks to a new all-time high, every single price that someone paid for a particular share of the S&P is now lower than the current price is at, right? So everyone's going to be green, more optimism, more hope, more overall kind of hope feeling, which is very risk on. So that's going to be the indication if this does actually break to the upside, although we do see more sell pressure than buy pressure. All right, a little bit of discussion on the Russell 2000 here. So let's go back to the daily chart. We see the Russell 2000 is not yet broken or at the high that we had back in February of 2020. It was not the all-time high either. September 2018 was all-time high. So it's been consolidating for a while here. If we're looking at the weekly chart, not really making any significant gains. Key level of resistance is going to be around 1720 to 1700. At that high there, let's just say 1700 for a round number. And then what do we see right now? See a slight squeeze occurring within the price action, although like always, we do not want to come to too quick of a conclusion. We want to make sure that the price action is really confirmed that it has validated both support resistance and it's broken out and broken market structure. So what we're looking for right now, we see a nice descending triangle formation with a horizontal level of support and a descending level of resistance. What I would ideally like to see is a break in market structure right around here. Maybe a little bit lower. Maybe right around there. So what we're looking for is a break in market structure of like 1587 to push us towards the $1,700 zone right around here. Right, that would be, in my opinion, a good trade for a possible risk on opportunity, because the Russell 2000 has recently broken major high right here. That was a major high. We retested it right here. Very, very well respected retest. And then we're looking for continuation patterns to our next major level of resistance. And this is a nice descending triangle formation, well respected. And what we're looking for is a break to form a new market structure high, breaking the consolidation right here. And you're looking for that previous resistance to hold as a new level of support. And that would be the validation that this squeeze, this contraction in price action is complete. And we're going to get the expansion phase to come in very shortly. So that's going to be the structure, the system that we use every single time in an ascending, descending, or symmetrical triangle formation. So it'd be nice to see, but we don't have that confirmation just yet, so I'm going to leave it just at that. Not looking for shorts just yet. So that's going to be the analysis on the Russell 2000. It would be nice to see passing 1587 onto 1600, retesting 1600 would be pretty decent. All right, so that's going to be the equities here. We're now going to quickly touch on gold and silver. So let's open this guy up. A little bit of a fake out, not ideal, but what we're looking for is some level of a squeeze. So we do see this zone right here. So I think silver just looks like it's in a better spot, to be completely honest with you. They do look like they're in similar situations because they just had a strong push to the upside. They're now going to be, in my opinion, consolidating, forming some level of a contraction before we get our next impulse phase again. So silver looks like it's more respected overall, in my opinion. You could shift this a little bit. So you go down, up. So now you're going like this. And then we go like this. This $26 range is a very significant level, so we do want to indicate that within the structure. And when we go on to the 4 hour or the 6 hour, we do see, I'd like to see this a little bit lower, but we're going to have to live with that. Kind of like that. And then we'll dive into the smaller time frame to see if this does match up and looks all right. That would be a better spot right around there, I think. Candle closure, oops. Right there. I'm going to go like this. Candle closure, wick closure, wick closure. So that's going to be the support zone, and this is going to be the resistance zone. We're only looking for longs on silver. Zero short opportunities on silver. There's just no reason to be looking for shorts on something that's doing so well to the upside. Okay, so right now the high that we want to break is going to be, let's get our little price label. It's going to be around 28.50. That's going to be the zone that we want to see break for this large symmetrical triangle, right? And we've seen this happen not just once, but many, many times before, right? We've seen this zone that we capitalized on, very similar structure, right? Symmetrical triangle, push to the upside, you're looking for breaks and retest of market structure, right? And you get this massive, massive push. Even this was a descending zone right here into a break and retest of this high, right? And you can classify this, what I did is I did something like this, where it's a descending wedge. Right, so you got a wedge, triangle, triangle. And now we're just looking for something like this to emerge, where we're going to get something like this. Maybe we'll hold, maybe we don't, that support. Something like this, right? Maybe you might get a little bit of a squeeze right here, maybe not. But once it breaks this zone, this series of lower highs, and starts trading in here, and once it breaks 28.5, this high, that's going to be the position where you're looking to potentially enter if you want to trade this symmetrical triangle for continuation to the upside. Now let's go to gold, because gold is going to be in a pretty similar spot. On the daily, this $1,900 zone was the key high in 2011. It wasn't the all-time high, but it was a key high in 2011, which is now, for us, a key level of support that we're looking to see contract the price with this descending trend line there as well. So we do see a potential descending triangle formation, which is a very solid structure to trade when you have an impulsive push break through a very key level and then retest, and then you see the lower highs, and that's going to be creating a descending triangle before the squeeze and the contraction and volatility before the expansion phase and the move up, right? So that's going to be what we're going to be looking for. Ideally, we're looking for maybe another retest right here, higher low break of this market structure, retest of that previous resistance into a new level of support and confluence with a descending zone, and then that impulsive push to come. And that's going to be our entry point on the retest, and then you're looking for the trend to continue moving towards the upside. Very, very, very similar structures that we like to trade, because consistency comes from kind of limiting the amount of variables that are kind of moving for your trades. You want to reduce the number of variables that you have. So those look pretty good. Nothing to say on crude oil, just absolutely doing nothing. I do want to touch on the dollar, because that, in my opinion, is going to be a pretty key player for the upcoming move. Because if the dollar does look like it's gaining strength, and for example, the S&P 2000, or not S&P, the S&P 500 is actually moving to the downside, that could be a good relationship there, where you see the US dollar finally getting some strength, because we've seen, look how aggressive the US dollar is falling, right? So, you know, the monetary policymakers don't want to make it too crazy. I don't think the US dollar is going to collapse at this point. I still think that they're still really going to try their very best to not go off the US world reserve currency system that they currently have. I think that the United States really benefits from that with the Swiss system, and they kind of have, the gates to, exchanging money throughout the world. That's a very, very powerful tool that they have, and I don't think they're going to just let it go without a fight. So I do not think that the US dollar is just going to absolutely collapse. We did see a massive sell-off, yes, but we have seen these sell-offs before, and they have recovered. Although this is a really long, grueling climb up. We might get something like that, but we don't exactly know. We just see some consolidation at this previous low right here. If we're going to the weekly chart, we can see it is a low multiple times all throughout here. We can make it a little bit larger like so. Support all throughout here turned into a little bit of a resistance on the way up, but after that point, we're just making strong pushes. So we are at a pretty key level of support, as well as this low, this higher low is now in confluence with this potential higher low from the low that we created in 2018. So this could be the higher low formation or completion, and then if we start to trend upwards, that could mean that the US dollar is going to have some strength again. And then we see that key level of resistance at around 102. So when we move on to a smaller time frame, we really want to pay attention to around this support zone right around there. Let's say 92 to 93. But the main zone we want to see break right now is going to be around either 94 or 92. Because right now, let's get our snip and discuss what we currently see within the structure. So this is an impulsive push. And then we see it range bound, right? Very similar structure here, right? Impulsive push, and it's range bound. If it breaks this zone, well, especially here, this was awesome because we have an ascending zone and this confluence, previous resistance, new level of support. That's about as good as you're going to get in terms of structure. That is an awesome potential continuation to the downside, which is exactly what we were anticipating. Now, what's different about this current one is we don't see these higher lows. That is the ideal situation for a continuation pattern to the downside. And then for the upside continuation, you're looking for something like this. In my personal view, so upside, squeeze, 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 continuation, right? These are the types of structures we're looking for to the upside. And then for the downside, we're looking for these ascending zones, which we don't really see within the second structure. So that's okay. So this is the zone that we don't see. And this is the zone that we did see these higher lows, which we're really happy about. So what we're looking for is because we don't see an ascending zone, we're going to view this as a strong level of support, and we see previous resistance or support turn to resistance, 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 right around that 94 range. So we're stuck between 92 and 94 range bound. So I view this as a horizontal consolidation, which we're either going to continue the momentum to the downside, creating another impulsive push, maybe to like 90, 89, somewhere further down, or we're going to consolidate and then we may actually reverse, right? So what would happen if this reverses? What would need to happen is risk on assets are going to be going down. So the S&P, Russell 2000, NASDAQ should be going down if this does actually reverse. And that could be the reversal of an expanding pattern, whatever the case may be. But if the dollar actually gains strength, the S&P is going to move down, right? BTC is probably going to move down. Not guarantee, but probably going to move down, right? Because this is a safe haven currency. The US dollar is a safe haven currency, same as the Japanese yen. So if capital is flowing into the US dollar, there's going to be capital flowing out of something, right? There's probably going to be capital flowing out of New Zealand dollar, United States dollar, Canadian dollar, stuff like that. A little bit more risk on currencies, as well as some BTC and some alts, I'm sure, because they have been in an absolute roar, and they're paired with the US dollar. So if the US dollar is weakening, things paired with the US dollar are going to look stronger, right? So it's vice versa if the US dollar strengthens. It's going to be harder for other assets compared to the dollar to look like they're doing well as well. Not impossible, it's going to take more appreciation because the thing that you're comparing it to is already moving up. My mouse is not really loving the multiple clicks, but anyways, that's okay. So that's going to be the two different situations we have on the US dollar. I don't really see a definitive direction just yet, but I'd like to wait a little bit more for confirmation before I kind of come to any conclusions. But I did like to talk about the US dollar because it's going to be a very important asset to be looking at within your weekly, monthly, daily analysis, whatever you'd like to look at. So that's going to be the end of the overall global macro update. I think we will go over BTC and Ethereum just because Bitcoin's obviously a very significant asset within the cryptocurrency space, and then we'll look at Ethereum because that's going to be a very significant zone as well. So let's go back to the weekly chart and indicate where our key level of possible support is that we're looking for a retest, right? Around 11.6, 11.5, and then we have our next one at around like 10.5, somewhere. Let's just move that a little bit higher, somewhere around there. And then our next zone is going to be at around 13.5. So let's go on to a smaller time frame. And then we saw this squeeze appear here, right there. So this is a little bit of a noisy situation we got here. Lots of consolidation. What I think I'm going to do is go here. Okay, this mouse is not really wanting to work right now. Give me one moment here. It's clicking maybe half the time. Hopefully that'll help. There we go. Okay, so that's one of them. And that's the support zone, and then we're also going to get our... That's the zone we want it to hold, ideally, in a perfect world. You could still argue, if this does close higher up, that right there, so let's just talk about it a little bit. We see resistance all along here, turn to support, right? As long as this candle closes closer to the support, you could argue that this is still a support zone hold. Oh, did not want to do that. Just wanted to close all these, but I guess for some reason I'm going to have to do it manually instead of the Control Z, which I normally use. So I still view the 11.6K zone as a strong level of support. Now if it starts to break like 11.4, 11, if it goes into 11.3, then this entire setup is no longer valid because it's broken the key level of support at around 11.5, right around there, and that's the last level of support that I like to see for BTC. But right now, we are taking a little bit of a pullback, but I do still think that the buyers are still potentially going to be present in the market. Let's just draw this. It did break out of that zone, yeah. I'm going to hold on to my initial idea, where I think it's still going to hold this zone and continue to move towards the upside. This is its first real major consolidation structure before the next potential push, because this is our first impulsive push. I think we're going to get another one and even potentially a third. So after this long drawn out time of lower volatility, contraction in volatility, we're going to get an expansion phase, and this is the first price action pattern within the move to the upside in the expansion in volatility. So my overall direction is still going to be bullish, and I think it's going to be holding that 11.6, 11.5K zone for BTC. Oops, let's take back Ethereum. Now Ethereum is in a little bit of a tough space because that, in my opinion, looked like a really good entry. It failed once it broke past like 435. That structure is no longer valid. Because it broke the higher low structure, broke below that main zone, so it's no longer valid. So what we're looking for now is, yes, continuation. That, in my opinion, was a nice setup. Did not go all the way to the target, but it's not going to do that every single time. That's just a part of life as a trader. And that's going to be the potential level of demand that we may see come into fruition right around there, if it does fall all the way to that zone, right in the middle of the symmetrical triangle there. And then what we could do is draw an ascending zone or descending zone from maybe here to here, but doesn't really seem to work. I'm not really going to do this just because it's too aggressive. So I'd like to see this hold, this projection zone hold. $388, that would be nice to see. And if it holds around there, you see lots of confluence where you see the lows and the higher lows create lots of demand, as well as that ascending previous resistance turning into a new level of support. Has not been validated at all. And ideally what you'd be looking to find is, let's get this, is like somewhat of a descending zone, and then it starts to go in the descending zone, and then it breaks, and then you still have your market structure, and it forms like a series of higher lows. So then you get a nice bottoming, and then you get a very strong, well-respected resistance and a nice bottoming where you get initial lower highs, bottoming, no lower lows, and then higher lows coming up, creating a nice bowl shape and a lid for it. And once that lid pops off, you're going to get a strong push to the upside, right? That's what we're looking for in a reversal pattern and a strong level of demand. So that's going to be the video for today. Thank you very much for watching. Hopefully you have or had a good trading week so far, and hopefully you continue to come back strong and do your best. So if you have any questions, drop them in the comment section below. I will be looking over them and answering any questions that are relevant to the video. Hopefully you enjoyed it. If you find these videos useful, entertaining, informational, it would be great if you would thumbs up the video. It does let us know that we should continue to be making these sort of videos. So thank you for watching, and until next time, have a good one.